Welcome back on the channel, everyone. In this video, I'm going to rebalance this exact pool on PancakeSwap. I will lock up a little bit in permanent loss, but I will also show you how you can avoid that completely. But this 100% Bitcoin position is what I'm holding right now, and it's not generating fees because, as you can see, the price is below it. So I'm going to lower this downside range even further to something at around $60,000. I will keep my upside as is at around $110,000, and I will walk you through the whole process behind this so that you understand how the token ratios work and why I'm using such a wide range liquidity pool. Because my end goal, it's not to make 5 or 10% profits in a week. I want to have exposure to Bitcoin price, and essentially I want to lower my entry with this pool and DCA Bitcoin using a liquidity pool directly instead of trading, because I want to earn fees completely passive, and you can only get that with liquidity pools, and very often you can get double digit APRs when using these blue chip assets pools over a whole span of a year. It's one of the most reliable ways to make money in DeFi in the long run, in my opinion. Of course, this is not financial advice, I'm sharing my experience, but with this you don't have to worry about impermanent loss. You just have one thing in mind: lower your entry DCA into the pool so that you can capitalize over time when the tides turn and Bitcoin price starts to go up. Right now we're at the perfect moment in time to do that, and even with the whole social economic situation going on in the world, I would say Bitcoin is doing really well, holding at around 70k with everything that is going on. So this is actually really impressive in my opinion. And with this long-term mentality, you also have to be aware that it's not ideal to deposit your whole liquidity in one go. Although you can, and there are ways then that you can manage your LP position even if you choose to go that route, but I choose to DCA into the pool, periodic deposits into it, and of course never shying away from buying the dip. Essentially that's what I will share with you on this video. Okay, let's get to it. Welcome back on the channel, everyone. So in this video, let me show you how I am about to rebalance this USDC CBBTC pool. I opened this when Bitcoin price was over 100k. It was at, I believe, 110k, something like that. And the goal of this pool is to buy the dip consistently over time, and at some point we will lower our entry so much that it's going to take a while, yeah, and it pretty much depends on how often you deposit, but the end goal here is to compound back in, buy the dip, so when the tides turn and Bitcoin goes up in price, we already lowered our entry enough that we can start to take profits slowly and steadily. I have these blue lines which are my previous range, or the current range, because I haven't rebalanced yet, and the green line is the lower range that I'm about to set. So right now this is 100% BTC because that's the mechanics behind liquidity pools, concentrated liquidity pools. With liquidity pools, the end goal is earning fees because you always get the worst end of the deal with it. You always get to hold the worst performing asset. But that's why I think if you go with these blue chip pools, they have constant demand, constant volume. It doesn't matter if we are in a bear market, there will always be on-chain volume demanding to buy and sell Bitcoin. It's the most traded asset. That's why I think these ones work really well in the long run. So right now I'm holding these 100% BTC, and if I'm going to deposit more, let's say I don't want to lock in permanent loss, I will lock a little bit, especially because I will have to lower my downside from 80k and the current price is at around 70k. So just for the fact that I'm lowering it this much, I will lock in a little bit of impermanent loss, because if price bounces back up until the point that it reaches Bitcoin's price when I opened or deployed the pool for the first time, I will not break even, or I might break even if I add on the fees, but just for the sheer value of the LP position, I will not break even because I'm diluting the worth of the Bitcoin that I have a little bit lower, okay? When you deposit into a pool, everything in between the current price and the upside, it's going to be, in this case, deposited in the shape of Bitcoin, and everything in between the current price and the downside, it's going to be deposited in the shape of USDC. Now, I'm using these wide ranges for a couple reasons. Number one, I don't want to be very active managing the position. I don't want to be every single day managing it. And number two, I still want to have some upside exposure when the Bitcoin price goes up. That's actually what is going to make this pool very much worth it in the future, as I compound and deposit when prices are low in order to lower my entry and start taking profits when prices start to go up. And also, if you look at the overall long-term chart, you will see that you have much better view of when to buy and when to sell, or in other words, when to compound or deposit and when you can take some profits if you want. So for example, I'm looking at the 4-hour candle chart. It's much better to look at this than looking at the 15-minute chart when we're having a long-term perspective with the pool, because it gives us much better space for breathing, so to say. You can be more strategic with your decisions. So I look at this chart and I can see if I would go and deposit, let's say $100 today, I would significantly lower my entry price from over $100,000 to under $100,000 easily, because I'm buying much more right now than I deployed back in when the price was really high. And our entry will pretty much determine if we are breaking even, if we are still at a loss, or if we are at the point that even if we sell 5% or 10% of the pool, we are going to really take profits because the price is above our entry. Liquidity pools are a way for you to trade as well, although if you go with these longer time perspectives, you don't have to be a day trader. You are just easily putting yourself in a better position to make better decisions. That's how I see it. So what I'm about to do right now is I'm going to lower my downside. That will mean I will lock a little bit of impermanent loss, but not too much, because I will leave my upside as is. And then I will deposit some more USDC, and that will be deposited straight up into this range between the price and my downside range. So you could do this with Crystal pretty much automatically. You rebalance, you deposit more. It's going to be more straightforward for beginners. But I'm going to go back here on PancakeSwap, and actually you can see here that this position in a month. So let me go back here. This is when I deposit at around the 30th of December. This is when I opened the position. Actually, it was a rebalance. It was not an original deposit. But from that date, the 30th of December, until pretty much 1 month, the 31st of January, it kept on generating fees. And how much did it generate? So I'm getting 63 cents, which is really good. This is probably like 2% a month. And I'm not considering this current value. I'm considering the initial value of the position, because it was at around $36, $38 overall, something like that. So it's not that bad. I mean, 2% a month. If you keep on adding that through a whole year, we're talking about something around 20% a year. And if we consider that we're talking about Bitcoin exposure specifically, that's even better. Some of the yield comes in the shape of cake, but it doesn't really matter. If you don't want to hold cake, sell that, put back into the pool, done deal. So you can see right now I'm holding this amount of CBBTC. Let me copy it. And if I want to open a new position, I will have to withdraw this, of course. And I come here, I open a new position, and then let me add in how much CBBTC I want, because I'm not going to put any more CBBTC in the pool. I'm just about to add on stables. Now, first things first, I want to switch up the current price here. I don't like to see all these zeros, and I'm going to insert my downside that I want to experience from here on, 60,000, and my upside, I'll let it be at 110,000. But if you don't want to lock any impermanent loss whatsoever, you will also have to adjust your upside range a little bit more. I don't want to do that because it will dilute my APR, and I think the fees eventually will allow me to break even. But if you don't want to lock in any impermanent loss whatsoever, that's what you could do. Now my new range will be this one. So let me paste here how much CBBTC I have, 0.00042. So yeah, that's about it. So with this current range, you can see that I just need to deposit to match this amount of CBBTC $10 worth of USDC. And that is because there's a whole lot less space in between current market price and my downside. And there's a whole lot of space between current market price and my upside. Because remember, this line, it's gonna be gone, right? What I'm about to do will make this downside range of Bitcoin to be here at current market price. And that does mean there's going to be a little bit of impermanent loss locked in, all right? If I would want to avoid that, this upside would also need to go up, which would further dilute my APR. It depends on what you're looking for, all right? The more long-term mentality you have, this can be a really good thing because it means that you can play this liquidity pool for an even longer period of time and potentially compound more or deposit more for a longer period of time. And the more you do that, the more exposure you'll have to Bitcoin. And eventually, if everything plays out in a couple of years or whenever Bitcoin reaches out to, let's say, 100K, once again, you probably already deposited and compounded enough for it to be worth it to take profits even before it reaches 100K. So this is a snowball type of effect that I'm aiming to build here, all right? Now going back here on PancakeSwap, what I can do is deposit this and then, so let me check how much APR I'm getting right now. So potentially I could get 15% APR. This will fluctuate, okay? There's also farm APR and all of that, but this is not going to be set in stone. And don't get too caught up in this because this will allow us to get exposure to Bitcoin. The more Bitcoin we get, the better is when the price goes up. And also, in case you are wondering, if I set up my max price, you see, as I increase my max price, the amount of USDC also lowers progressively, and that's because we are widening this upside range, all right? So we're getting more and more exposure to Bitcoin, so the ratio of Bitcoin to USDC differs because of that, all right? So the same principle applies. If you're a complete beginner, and if there's some questions that you might have so far, let me know in the comments, all right? I'll get back to you. So this is how much I need right now in order to rebalance the position. I have this Bitcoin already. I don't need to buy more because this is what I extracted from the pool, right? This is what I'm about to withdraw. And when I deposit into the new position, I need $10 more to put me back into the game earning fees with this newer minimum price. And then of course I will deposit a little bit more because I will buy more Bitcoin and that automatically lowers my entry. And this is the key thing I want you to take from the video. The lower your entry is, the better. Let's say that your entry goes as low as $65,000 and that will be as easy or as hard as how much did you deposit back when the price was higher. If you deposit a lot back here, now you'll have to compensate for that, right? And you'll have to deposit even more when the price is low. You'll have to buy the dip as hard as you bought the top, if not more. Actually, you have to buy it even harder than what you bought. But let's say we can lower our entry to 65,000. When it goes back to $90,000, we are already 40% in profit, if not more, because as it generates fees, we can compound back in more. And as we compound, we essentially also lower our entry even further. I think you get what I mean, right? But the end goal is this: have a wide range, lower your entry. And this is also something I touched in previous videos, but if it's the first time you're watching, do not deploy your liquidity in just one go. You can, and you can work with that as well, but I think it works best if instead of having $1,000 deposited in just one go, you deposit $50 a week or $50 a month and you go from there. And whatever the price is, you just DCA into the pool. All right, so what I'm about to do is that I'm going to withdraw my LP position and I am going to open this new one. And that is ultimately my goal. In other videos, I showed you how to open those positions step by step. You can go ahead and watch those videos if you want some step-by-step guidance. And I will also link up another video where you can rebalance your positions using borrow and lending protocol. So for example, right now, let me go back here. I have this amount of Bitcoin, right? I could withdraw this, go to a borrowing lending platform. Since this is on Base, I could go to Moonwell. Okay, so this is it, Moonwell. I would come here on markets and I would be able to deploy my CBBTC there. So you see here, assets, CBBTC, I can supply. It's not allowing me to do that because I have none in my wallet right now, but I could come here, supply. Let me show you with USDC because I have some amount here. So I could come here, supply, and then use the borrow function to borrow against it, it takes a little bit of leverage, but if you do it responsibly, this can be really, really powerful. I covered that extensively in other videos. So let me just go ahead, withdraw liquidity and deploy, open a new position, and essentially show you how much APR I will be getting from here. Okay, to withdraw liquidity, I click the minus button. I can take the whole thing out. That's what I'm about to do. Remove. And I will get automatically all the fees I earned so far. Yeah, so here it is, simulation results. I'm getting all the Bitcoin cake and the fees in USDT. Confirm. Now to open the position, you'll see there's multiple pools, different fee tiers. This one has 62% APR, this one other 43%, this one other 260%. Eventually, traders would only use or mostly use the pools that have the lowest fee tier because this is going to be a cost for traders. So even though that this fee tier here is much higher and it has a really good farm APR, I'm going to deploy liquidity here, and it doesn't really matter because if tomorrow in the next couple of days I see the other pools are performing better because they have a lower fee tier, I can simply withdraw the liquidity from this one, add to the others with the same ranges, and there's not going to be any sort of fees or taxes that I will have to pay for that. We are completely free to deposit, withdraw liquidity whenever we want from decentralized exchanges, okay? So let me go ahead, select this pool, add liquidity. Now I want my downside now to be 60,000. And my upside, it's going to keep the same, 110,000. You see in this pool, the APR is at around 45%. And that's because I'm using a much wider range than most people on the pool. So the advertised APR, I believe it's an average of everyone who is deploying liquidity in the pool, all right? But even with this type of range, we're looking at something like this. Overall, what we were talking about is an 80% range on Bitcoin, and I'm potentially getting 40% APR. So that's really good in my opinion. Although I don't think this will hold as high as it is for that long. It can be easily going back down to 20% or even 15%. I wouldn't be surprised of that. And that's just my experience yield farming. So yeah, don't get too caught up in this because you might be disappointed later on in the future if the current APR substantially starts to go lower and lower than what it was when you first deposited. In any case, I'm gonna try with this one and see how it goes in the future. Okay, our downside and upside are set. Now I withdrew all of the Bitcoin from the other pool. I have it here, so I just need to deposit. I have enough USDC. I'm going to add. If you never did it before, there's going to be a couple more transactions you have to grant permit in your wallet to have access to CBBTC or USDC. Okay, everything is done. Position is now earning us yield. I still have some dollars here that I want to put into the pool. It's like I said, if you want to avoid all of this, you can do it straight up in Crystal. So I have $10 more than I need to deposit. So something like $2.50 is going to be my deposit, and everything else I have to swap from USDC to CBBTC. So I need to buy this amount of CBBTC. So I can just copy this. So this is the swap that I need to do. Done deal. Now I'm going to go to earn farm liquidity, my positions, find the pool that I want here on the list. So I'm going to click the plus icon to deposit here. Max, increase, sign and confirm, done deal. So this is the current APR. I gotta tell you, probably tomorrow when I check the position, this will be much lower, but let's see. If it's the case, I have plenty of other pools to choose from, like I showed you already. And this is how I rebalance the pool. From here on, if it keeps chopping sideways, perfect. And it's very much close to the bottom. Right now, this is my current downside. This is my current upside. It's going to be awesome if it keeps chopping sideways, earning us yield inside our range. So now picture this. If there's going to be like these massive spikes, the yield will be really, really good. The APR will skyrocket for a short amount of time, but at moments where we see massive green candles, we can earn even 1% a day with such a wide range. It's going to very much depend on a lot of factors, but it's possible. And the same is also true for downsides. So right now, I'm not optimally positioned for that, because if Bitcoin drops more than 13%, I'm going to be out of range. And then I need to redo this once again, put more liquidity back in. But eventually, as time goes by and you readjust and rebalance your position, eventually the market is going to bottom out. And when it does, having our downside very close to it leaves us very much exposed to all of that potential price appreciation. And at that point, probably we will want to also start to widen up our upside to get further exposure to future price appreciation. Although this strategy definitely works, it's going to take time, but I hope you took value from the video. If you have any questions, let me know in the comments. On screen, you can find links to other strategies that you can rebalance your position without locking in permanent loss and using borrow and lending protocols to refinance yourself and open new liquidity pool positions. This is not rocket science. Anyone can learn this in a couple hours. And also you will find on screen linked another video where I show you the risks of holding these tokenized versions of Bitcoin, which is the case also for CBBTC. Okay guys, if you have any questions, drop them in the comments. I'll get back to you. Thank you for watching. I hope you took value from the video. Take care. If you enjoyed this type of content, like and subscribe for more guys. Keep exploring crypto and I'll see you on the next one.